Hey, how's it going guys? In today's video, you'll discover what are the 5 best monthly dividend ETFs that you can buy right now. So instead of paying dividends each quarter like most funds, these 5 ETFs will pay you dividends every single month. Without losing too much time, let's take a look at my pick number 1. The first fund is the Invesco S&P 500 High Dividend Low Volatility ETF with the ticker SPHD. This ETF is tracking the 50 least volatile high dividend stocks that are in the S&P 500 index. This index is worldwide known because it currently holds the 500 largest American companies in terms of valuation. This ETF is very interesting for investors looking for high dividend companies that doesn't have too much risk. It's why this ETF currently holds about 50 stocks, which includes companies such as Kinder Morgan, AT&T, and Altria Group amongst the biggest holdings of this fund. Overall, this ETF is well balanced amongst its sectoral diversification, with the utilities, the real estate, and the consumer staples being its 3 largest sectors. 10 years ago, if you would have invested about $10,000 in that fund, this would currently worth more than $28,000 at the moment, which represents an average return on 10 years of about 10.40%. And for some management fees of about 0.30% per year, or if you prefer $30 per $10,000 invest in that fund, you would receive a great monthly dividend distribution of about 3.78%. But if you're not familiar with how the dividend yields are working and how it can affect your portfolio, well, I will explain it to you a little bit later on in the video, so make sure to stick around. On its side, Morningstar is giving a quote of average risk compared to its peer of its industry. So on your side, if you're an investor looking for great income each month from a certain ETF, this pick could be very interesting for you. But so are the following ETFs on this list. Now for my second pick, I've went with the Super Dividend US ETF with the ticker DIV. As the first fund, this one is tracking an index composed of high dividend companies with low volatility, but with the difference that it is not tracking only the S&P 500 but the whole US market. And as an income investor, this can be very interesting if you're looking to also have some exposure to mid and small cap companies. So on its side, DIV is holding 50 of the highest dividend stocks in the US market, which includes companies such as Sabin Royalty, Gilead Sciences, and USA Compression amongst its biggest holdings. On its side as well, DIV doesn't have any big tilts in any kind of sectors, with its top sectors being the utility, the consumer staples, and the energy. Unfortunately, this ETF is quite new, so we don't have any 10 years return on it. However, 5 years ago, if you would have invested about $10,000 in that fund, you would currently sit on about $15,000 at the moment. And this represents an average return per year of about 1.60%. And with the management fees being of 0.45% per year, you could expect to pay about $45 per year on $10,000 invest in that fund. Plus, DIV is giving a great 6.44% of monthly distribution for their dividends. But this also comes with a higher risk quotation from Morningstar compared to its category. However, it's still a great pick to have some diversification in your portfolio, especially if you want to have some great high dividend companies with low volatility. But obviously, it will be slightly more risky compared to the first ETF, since it is also having some different small and medium caps in this ETF. And it's also giving a higher distribution rate compared to SPHD. But wait until you see the 3 last ETFs. The third ETF that I'm about to share with you right now is quite less risky compared to the 2 first one, and it's the iShares Preferred and Income Securities with the ticker PFF. This ETF is tracking an index composed of American companies that are considered as hybrid securities or preferred securities. In fact, if you didn't know, a preferred stock can be considered as a mix between a bond and a common stock. It has the features of both a debt where it pays some fixed dividends and an equity where it can gain also some appreciation. But with the main difference with common share that they don't have any voting rights. So this strategy can represent a great alternative for income investors. Instead of buying dividend stocks that have a little bit more risk or bonds that doesn't have necessarily a great potential of return, well, with this ETF you will receive some preferred shares that will give you some great stability in your dividend income with also some potential of growth. In total, by buying this ETF, you receive about 493 different hybrid and preferred securities, with some of the biggest holdings being Wells Fargo, Citigroup, and Extra Energy preferred shares. And as you can see, the sectoral distribution has one major tilt, which is in the financial sector, and after you can find the industrials and the utility sectors. And another important point is the majority of the credit rating, which is sharing with the investors what is the quality of the companies in which you are investing, is actually of great quality. However, there are still about 28% of the total portfolio that is invested in what is considered as junk bonds, which are bonds that are usually more risky to go to bankruptcy, for example, but that still have a higher potential of return compared to bonds with a quotation of 3B or more. So they will usually have a higher dividend yield as well. On its side, PFF is costing about 0.45% of management fee per year, or if you prefer, $45 per $10,000 invest in it. And over the last 10 years, by investing $10,000 in that fund, this would currently worth about $18,000, or if you prefer, an average return of about 3% per year. And with the stability of the preferred shares, this dividend is offering a massive distribution of dividends per month of about 8.75%. But it still has a slightly higher risk quotation from Morningstar compared to its own category. But overall, it is still a great addition to your portfolio, especially if you want to diversify your different investments, notably by receiving some safer dividends compared to the other ETFs. Now for my fourth pick, I've went with the Wisdom Tree US High Dividend ETF with the ticker DHS. This fund is basically tracking an index composed of the highest dividend US companies in the entire market. So by buying this ETF, you're targeting the largest dividend American companies in the entire market. It is why amongst the 396 total stocks within this ETF, you can find companies such as ExxonMobil, Chevron, and Pfizer amongst its biggest holdings. And without surprise, the financial sector comes as the largest sector within this fund, closely followed by the energy, the utilities, the healthcare, and the consumer staples sectors. 10 years ago, by investing $10,000 in this fund, you would currently sit on about $26,000 in your pocket. And this represents a whopping annual average return of about 11.04% per year. And for some mere management fees of about 0.38% per year, or if you prefer $38 per $10,000 invest, you would receive a monthly dividend distribution of about 6.30%. And a super interesting fact is that its quotation of risk by Morningstar is considered as below the average compared to its peers of its category. So it definitely is a great pick that has made its proofs in the past that it can perform without having too much risk. But wait until you see my final pick. And talking about my last pick, I've went with the Invesco High Dividend Yield Financial ETF with the ticker KBWD. And as its name is saying it, this ETF is tracking an index composed of the best high dividend yield companies in the financial sectors. And with 41 stocks in this ETF, most of them must be unknown to you. For example, you have companies such as Orchid Capital Ireland, Annaly Capital Investment, and MFA Financial among its biggest holdings. And what is really interesting about this ETF is that the financial sector is often considered by many as being the safest sector in the entire market, but it's also considered as being one of the best sectors with the highest dividend companies. And over the last years, we've seen that the financial companies have been some of the best performers in the entire market. For example, by investing $10,000 10 years ago, this would be worth nowadays about $17,000, or if you prefer, an average annualized return of about 5.44% per year, while receiving a massive 10.32% per month of dividend distribution. And all of this while paying some pretty low management fees of only about 0.35% per year, or if you prefer, $35 per $10,000 invest. So it definitely can be a great complement to your overall portfolio by also adding some financial exposure in it. All of this while also receiving some super high dividend income distribution. But now, as I told you earlier, let me explain to you how dividend yield distribution works precisely. Let's take the PFF example with a distribution of about 8.75% per year. First, to calculate how much money would you have in your pocket from it, well, you just have to calculate what is your annual dividend distribution from this ETF. So you take your dividend yield, so 8.75% in that case, that you divide by 100%, and after you'll come multiply the result by the current price of the stock or the ETF. And for the example, I'll take the actual price of PFF that is about $32.53. And this would give you an annual dividend of $2.85 per year. And now if you want to find what is your monthly dividend that you receive, you just have to take this amount and divide it obviously by 12 months, which in that case would give you about 24 cents per month. And with this method, obviously you can calculate how many shares do you need as a minimum to reach a certain threshold of monthly income, for example. And this could be very useful if you want to plan for your retirement or for some future plans. But on your side, after seeing what are the best monthly dividend ETFs that you can buy right now, you might be wondering, hey, but Louis, what are the best high growth ETFs that you can buy right now and hold forever? Well, in that case, check out the video that's gonna be right over here, and I will see you soon. Peace!